All right, welcome back. We got a Amazon earnings video for you today. So yesterday Amazon had their earnings. I listened to the call. We'll talk about the earnings and then we'll look at the stock chart. But I mean, great quarter overall. Let's look at the quarter right here. Earnings per share was 98 cents versus an 83 cents estimate, so a good beat there. The revenue was 143 billion versus 142 billion, so that was a good beat. Their operating income was 5 billion higher than expected, so that's great. And Amazon Web Service is $100 billion annual revenue, so that's great to see. Their revenue was up 13% year over year. That's phenomenal for such a great company to be growing at 13% year over year. That's great. And their margin was up to 11%. And so they have 50 billion of free cash flow. So this is all good stuff. Again, the best thing about Amazon is they're becoming a lot more efficient and they touch a lot of money and they're keeping a lot of that money and able to reinvest into whatever they see fit to get more revenue coming in. So it's compounding all the different types of businesses that they have. Amazon Web Service is the big giant here because just a huge profit margin, 38% margin, and their revenue's up 17% year over year. When it comes to guidance, their guidance was a little soft, not too crazy. The expected was 150 billion, and they guided 144 to 149, so a little bit under the expectation, but pretty much spot on. So really good quarter there from Amazon. Um, they're going to keep spending on AI. They're going to keep reinvesting money in there. It was a great quarter. They didn't announce a buyback, a dividend, and they announced that they are going to increase spending. So that is why the stock didn't really have a reaction in price, which I'm pleased with. I don't want this thing to run away. If you look at Google and a couple quarters ago, Facebook, they both announced a dividend that they were going to start paying a dividend, and you saw a huge bump in the stock price. I don't want Amazon to run away because I'm still accumulating nice and slow, and I want there to be a nice dip when the market does take a bigger turn. I want to accumulate at lower prices, and I don't want it to run away because eventually Amazon's going to be reporting $2 in earnings per share. They're going to have 200 billion in revenue, blah blah blah. They're going to just keep growing and growing and growing, and I want to get a big piece of my portfolio of Amazon before they do that. So I'm glad that they're not saying we're going to start paying money to shareholders. I want them to keep reinvesting in the business so they can get to $1 trillion in annual revenue. That would be $250 billion a quarter. So let's take a nice look here at this infographic. Again, $143 billion in revenue. A lot of that comes from the store, Amazon Prime delivery. They have their physical stores around 5 billion, third-party seller services around 35 billion, advertising, which is up 24% year over year. I believe that is their fastest growing segment of their business is advertising, and that's going to keep growing when it comes to streaming and also their online store. They're killing it on the ads. Audible and Amazon Prime, so their subscription business is around $10 billion. Amazon Web Service, 25 billion, and then other of 1 billion. And gross profit is $70 billion, and then they have an operating expense of 55 billion, and then their cost of sales is 72. So at the end of the day, they got a net profit of 10 billion, um, which is awesome. Again, most of their profit comes from AWS, which is 9.5 billion versus everything else is around 6 billion. So again, AWS is where the majority of their net profit comes from for now. Once this advertising keeps growing, that'll grow the profit because advertising is super high margin business. There's not, when you buy razors from Amazon, they sell them to you for $1. They got to pay $1.99 for them. So they're making literally, no pun intended, razor thin margins. So great business, not going anywhere. We all use them. We all like them, hopefully. So this is just great. Just growing and growing, and the goal here is to get this little green net profit to grow larger and larger, and that's going to be by cutting down the expenses down the road. So let's take a look at the stock chart, because like I said, not a huge reaction here, which I'm quite pleased with. There was a lot of volatility in the after hours, as there always is for earnings plays. But again, we've had a nice little dip here, and these two opportunities were opportunities I just missed on purchasing. I have an order out at 165, and we've missed it a couple times by pennies. So I still hope that we can get down there. That is the price I would like to add another chunk of shares. But I do think we are on the path to breaking this red line here eventually this year, hopefully. But I'm hoping we get a nice little correction before then. And when we zoom way out, we haven't gone anywhere since March of 2021. This is again another reason why I'm so bullish on the stock, is we've gone nowhere since even 2020. 167 in July of 2020. So that's 4 years ago. And I know the stock pulled forward a lot from COVID, but again, it builds these big bases and then boom, makes a monster move. I think we are due for a monster move within the next year and a half or so. But this is a long-term hold for me. But other than that, not a whole lot to talk about. Just great company. Listen to the earnings call. I'm not going to lie to you. I did fall asleep during the earnings call, but there's just not a whole lot to talk about. Everything's running smooth. There's no fires to put out. They got so much money. They're saying, "Oh, we'll put money in this AI startup, this AI project." So they're in a great position, and they're just going to keep compounding their gains. So that is Amazon. Tomorrow we have Apple. I'm looking forward to that, and also Coinbase. I'm looking forward to that. I will do a video on for sure Apple. But until then, have a great day. Peace out.